It's Thursday, the 27th of February, 2025. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 big stories to get through in 5 minutes. Let's go. Story number 1, the Magnificent 7 tech stocks that powered a 54% surge on Wall Street over the past 2 years are officially in correction territory. Yesterday, the Bloomberg Magnificent 7 index dropped more than 3%, taking the slide since the December 17 peak past 10%. Now, that slide has seen about $2.5 trillion worth of value wiped off the stocks, led by a 37% plunge in Tesla's share price. There's a bit in this.
Sure is. Tesla's market value fell back below $1 trillion yesterday morning following an 8% sell-off after Tesla sales in Europe dropped 45% last month, even though EV sales jumped by about 37% in that region. Amazon, Microsoft and Alphabet have lost at least 10% since mid-December. Apple and Nvidia are down 2%. Meta Platforms is the only winner, up 5%. So, is the golden run for the tech sector over? Can't really answer that. Those small caps in the US are actually outperforming. The broader S&P 500 is definitely outperforming tech stocks at the moment.
Why is this happening, Sean?
The immediate reason includes the fact that Trump 2.0 is so focused on tariffs, and every tech giant imports goods and services. It'll cost them more. That'll hurt earnings. There's more to it, though. Trump 2.0 is also focused on Middle America, steelworks, manufacturing, that type of stuff. Their industry is gaining from the new government, making them relatively more attractive to investment options to investors. Then there's the emergence of companies like DeepSeek out of China, proving competition in boom areas like AI. And, of course, they're very expensive to buy.
Just quickly, the tech stocks aren't the only kind of wobbly assets on Wall Street. Bitcoin's value's fallen sharply, including more than 8% yesterday.
Currently, it's trading around $87,000 a unit, down about 20% since Donald Trump's inauguration. Other cryptos are falling as well. The whole tariff issue, the combative stance against allies, rivals, working against the sector at the moment.
All right, moving on to story number 2. Annual inflation remained steady at 2.5% last month, though underlying inflation, which, Sean, the Reserve Bank watches so closely, rose a touch.
The underlying rate rose slightly to 2.8%, which was expected, and mostly due to some electricity rebates ending. The main reason for the increase in inflation were food and non-alcoholic beverages, housing, alcohol and tobacco. Now, Treasurer Jim Chalmers said the fact that underlying inflation is within the Reserve Bank's 2 to 3% target range suggests the inflation crisis might be over.
On to story number 3. Woolworths' net profit tumbled 20% last half after its supermarkets lost $240 million in sales following 3 weeks of strikes at the supermarket's distribution centre ahead of Christmas.
So the result and the cost of the distribution centre dispute were both more than expected. That sent Woolies' share price down 3% yesterday. If you extract the distribution centre issue, earnings were down about 5%. That's on the back of people shifting to lower-priced home brand items and deeply discounted specials. The average ticket price during the quarter fell by 0.2%. That's 4 quarters in a row where the average ticket price has fallen at Woolies. New CEO Amanda Bardwell called the first half difficult and disappointing. She's targeting $400 million in cost cuts to simplify the business.
Story number 4, WiseTech Global has appointed billionaire founder Richard White as executive chairman, marking his return to the top job after a 4-month absence and despite a number of allegations against Mr. White being investigated by the company's board.
Clearly, he won the battle to control the company he founded 31 years ago. Yesterday, WiseTech chair Richard Damery and 3 independent directors resigned from the board over intractable differences over Mr. White's role. Mr. White told investors he's back, fully engaged and in for the long haul. Earnings for the December half were down due to the slow delivery of new projects. There were 3 of those projects. This was during a period when Mr. White was removed as CEO. The inference yesterday was that he needs to be back to keep the company on track. WiseTech's share price fell more than 20% on Monday, Tuesday. It rose 2% yesterday, but just the fact that it didn't regain more suggests that there's a lot more to play out in this particular story.
Last one, story number 5. Scentre Group, which is the owner of Westfield Malls in Australia, plans to build thousands of high-rise apartments around its properties.
Chief Executive Elliot Rusanow said he is prioritising obtaining as many rezoning applications or approvals as possible to allow for high-rise towers to be built alongside shopping centres. So far, he has secured rezoning at Hornsby in Sydney, 53-storey building there. Belconnen in Canberra, a 28-storey building. That's about 4,000 new homes. Centre increased customer visits last year by 14 million to 526 million. Not bad. Among 42 centres, 19 are fully occupied, 5 have just one vacancy. Who said bricks and mortar retailing was dead, Michael?
Yeah, indeed. There we go, the top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It is Thursday, the 27th of February, 2025. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.